Have you ever heard of a home equity line of credit? If you ever want to explore the benefits, where to find them, and a general simplified overview of the HELOC, this video is for you.
Quick disclaimer, all the content on our sites and pages is for informational purposes only and does not constitute any advice or any recommended course of action.
A home equity line of credit, abbreviated HELOC, is basically a second mortgage on your home that acts like a credit card, meaning you only pay when you use it. The term for using it is called drawing against the line. Once approved, the line opens for a set period of time. Typically, this is 10 years. Every month, the bank calculates your monthly payment due from the checks you write. This calculation is based on the interest rate you are approved for and the time period you have left on your line. We will get into some examples in a moment. In summary, the HELOC could be a very useful asset to have available. Let's take a look at three examples. Let's say three different people get approved separately for a $30,000 home equity line of credit. Person A draws the full $30,000 against the line. They simply pay the monthly amount due until the line closes in 10 years. Person B draws $30,000 as well, but then pays back $10,000 in 5 years. They now have $20,000 left to use until the line expires, because remember, they were approved for $30,000, paid back $10,000, which leaves $20,000. So you can see the benefits of flexibility here in this example. Finally, person C doesn't use their line at all. Maybe they just wanted to have it as a backup or in case of an emergency. They pay $0 of principal and interest to the bank. It's worth noting that many banks will charge a small fee, around $75 to $100 a year, to keep the line open. In summary, the examples show the flexibility you have to use the line in a number of different ways based on your needs and intentions for it. The best place to find HELOCs is local community banks. Banks will look at your home's equity, debt-to-income ratio, credit score, and other assets. It takes about 30 to 45 days for the line to open, so it's worth planning ahead and getting started even before you think you may need it. Common uses of HELOCs include large payments like tuitions, home renovation projects, capital expenditures for investment properties, and vacations. Maybe you don't want to pay everything out of pocket at once. HELOCs have variable rates, simply meaning the rate adjusts. Every bank adjusts at different frequencies. Some adjust monthly, quarterly, or yearly. Most banks use what's called the prime rate as a baseline. You can easily see what the current prime rate is today by Googling current prime interest rate. For best practices, do not miss payments. Remember, this is a lien against your home. Set a reminder in your calendar or turn on auto pay. And we also created this spreadsheet for you to stay organized. There is also a section where you can record offerings from different banks as you shop around for the best HELOC product. If you would like a copy of this spreadsheet, please send a direct message. As a quick recap, HELOCs are a solid and flexible financial tool to have available. It takes 30 to 45 days for the line to open, and to access the funds, you are issued a checkbook. The average line stays open for about 10 years, in which you only pay when you use it. Many banks will charge a nominal fee to keep the line open. And remember, make sure to stay up to date on your payments. That'll do it this time around. As always, I greatly appreciate you watching. Feel free to send me any questions at all, and feel free to send me a direct message or an email, and I'm happy to send you a copy of the spreadsheet. Thanks again, and make it a great day.